There is a slight bit of an attempt to recover from the lows of the day, but will that recovery be sold into? We'll find out over the next 120 minutes. Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. There's a slight bit of recovery from the lows. There are certain pockets that are doing very well, but you can't say the same for a lot of these PSU companies.
Absolutely right, Hormuz. Good afternoon to you too. It's the financials that are making an attempt at a comeback, and they are the ones that are holding higher. A couple of stocks from the pharma pack, they're doing quite well on the back of results. Names like Divi's, Max Health continue to see gains. But overall, muted said, if you look at the screen, the markets are still in the red. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks fall across the board after US ups tariffs on imports from Canada, Mexico and China. In India, mid-caps feel the heat. Capital goods and utilities are the biggest drags. IT bucks the trend.
Capital goods stocks are under pressure after the government sets capex spending target at 11.21 lakh crore rupees for financial year 2026, which was a 0.9% increase from the budget outlay in the previous financial year. Siemens, Thermax and Hitachi Energy India have lost between 6 to 9%.
OMCs under pressure after there is no mention of LPG subsidy in the budget after Street estimated 35,000 crore rupee LPG subsidy for FY25. IOC and HPCL correct between 3 to 6%.
Auto ancillary stocks like Sona, BLW and Samvardhana Motherson are declining after US President Donald Trump imposed a 25% tariff on goods from Canada and Mexico. The street is worried that the company's exposure to clients in Mexico could impact their revenue.
Divi's Labs in focus after the company reports its Q3 earnings. Net profit surges 64.5%, revenue rises 25% on a year-on-year basis.
A part of this recovery could also be attributed to the fact that the Dow futures are seeing some marginal recovery from the lows, if not a significant one. At one point were down 700 points. They're still down 600. There is no significant recovery, but still a move higher from the lows nonetheless. And of course, there are a lot of these capital goods names, these railway stocks, PSUs, they are continuing to see a bit of a sell-off. But of course, the consumption-oriented names were the stars on Saturday. They continue to be the stars in today's session as well. But what are some of these names that are doing well and are not so in the mid-cap universe? Vamakshi is joining in to take us through the mid-cap movers this afternoon. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Lots of mid-cap stocks that are declining in trade today as compared to the stocks that are advancing. Let us pull up the list of the top losers first. Let's look at Hudco. The stock is down nearly 9%. NCC, Elecon Engineering and RITES are some other counters that are seeing a very sharp fall in the trading session today. Apart from those, like you pointed out earlier, capital goods stocks continue to remain under pressure. They lost out some momentum on Saturday and they continue to decline in trade today, anywhere between 3 to 8%. Thermax, Hitachi Energy, CG Power and Cummins, all of these counters are under pressure today. But on the flip side, the consumption names, like you rightly pointed out, Hormaz, were the stars of Saturday, continue to gain momentum in trade today. Look at Westlife, that stock is up nearly 3%. Devyani International, Voltas, Chalet Hotels, as well as Nykaa, all of these counters are up and away in trade today. Let's also look at some of the stocks that are reacting to their numbers. Anantraj, the stock is seeing a downtick of almost 7%. Aarti Industries, GR Infra Projects are also down 2% and 5.5% respectively. And Neogen Chemicals reported a strong set of numbers. Net profit has increased from 1 crore to 10 crore on a year-on-year basis. That stock is up and away in trade today. And as far as top gainers are concerned, Saregama, that stock is up nearly 8%. Metro Brands, Jubilant Foodworks, Paytm, all of these counters are up and away in trade today.
Thank you so much for that, Vamakshi, for taking us through the list of moves that we are seeing as far as the broader end of the markets are concerned. Let's now slip into a short break. The management of Mahindra Lifespace developers join us now to discuss their Q3 numbers and the way forward. Welcome back to Midcap Radar. Well, Mahindra Lifespace developers recently reported their Q3 numbers. Pre-sales declined 24.6% on a year-on-year basis, while collections dipped 5.2%. The company has also set a booking guidance of 8,000 to 10,000 crore rupees for FY28. To discuss more on this, Amit Kumar Sinha, the MD and CEO at Mahindra Lifespace Developers, joins us now. Good afternoon, Mr. Sinha. Thank you so much for joining us. Before we get to the results and the guidance that you've provided, just 10 minutes ago, we saw a notification to the exchanges, and we also saw the flash on our screens regarding redevelopment of 3 properties that you all have just won. This is in the Lokhandwala complex district of Andheri West in Mumbai. Give us a sense of this particular project. When does this particular project come on stream, and what is the revenue potential from this particular project?
Thank you for having me. I think this is an exciting development at our end and very timely for this interview. This is in a very premium location in the very west. We, as you know, focus a lot on suburbs of Mumbai, and roughly the revenue potential is, GDP potential is 950 crores. But we expect that to go up as we finalize the DA and the contractual obligations as part of this redevelopment. Exciting location. Just came to us. We've been working for some time, so we're excited to have it as part of our portfolio. It will take roughly a 12 to 18 months to bring it to the market, as we call land to launch, when you kind of secure the land, because the society redevelopment is a very involved process with the residents. You have to make sure that all the approvals are there and they can vacate, and the construction then can start. So that's 12 to 18 months typically.
Amit, good afternoon. Thank you for joining in. Getting to numbers, then you just mentioned about the fact that 9 months you have done 1750 crore in pre-sales. With the current figure that you had in the third quarter, which was anywhere close to 330, 340 crore, do you think you'd still be able to achieve 2,500 crores by the end of the year? And if not, what would be the revised number for your pre-sales guidance?
We will achieve 2,500 crore with our original guidance. Quarter 4 tends to be quite attractive in terms of the launches. So we have a healthy set of launches planned in the quarter 4. This business is, you can't launch anything till you have all the approvals in place. Quarter 2 and quarter 3, quarter 2 typically is seasonal low. Quarter 3, because of election, etc., was affected. We already have gotten 2 out of 5 approvals that we expected to come through for this financial year. One came on 31st December, one came just last week. So this will anyway help us achieve our aspiration. We should be in good shape for 2,500 plus for this financial year.
Are you seeing that kind of demand on ground for you to do anywhere between 750 to 800 crores worth of pre-sales in a quarter? And do you have the pipeline in place for that kind of a pre-sale?
Yeah. I think quarter 4, FY24, we saw the similar. We had 1,000 plus crore last financial year. And even quarter 1 of this was very healthy for us. So we have seen that seasonality, and there is a healthy demand in Q4 and Q1 typically. We, as I said, 2 of our large launches, Mahindra Vista, which is in Kandivali East, we had done phase 1 launch, which did really well. Phase 2 has been brought forward to this financial year, quarter 4. It's the last stage of RERA approval. We applied for RERA already. All the approvals are in place. So that should give us a significant bump up. Ivy Lush, which is in Pune. Previously it was called Ordean Crown in Wagholi. Phase 1 again was brought up in the last financial year. We have seen great response to it. 63% inventory already sold out. That also has been brought forward to this financial year, for which we already received RERA. So given these 2 large launches and Citadel, Tower I, there is 1 launch planned in Bangalore, for which we are in advanced stages of approval. All those should help us achieve our pipeline aspiration to cross as you asked.
Okay. Mr. Sinha, what we want to focus on is on execution. And also we understand that there were some on-ground delays, especially when it came to the Karnataka market in South India. We understand that registrations were delayed in Karnataka. Did it impact you in any manner? Did you have any launches that were up for going ahead and also up for revenue recognition in the Karnataka market? Secondly, give us a sense of how exactly collections are panning out as far as Mahindra World City in Chennai is concerned. How many of those leases are up for renewal? Are they happening at a higher rate?
Yeah, so you have two questions. One is respect to Mahindra
Right.
World City Chennai. The second is with respect to Karnataka.
Yeah.
Yeah, so there have been some approval delays, partly linked to what we just talked about, but also partly linked to some of the other changes that have come in the urban city planning for Bangalore. So we are trying to address that. I think it should get resolved. I think it's part of the industry. We have to abide by all the regulations and the requirements of the government agencies, DVMP, VDMP. All those things are critical for us. So we will solve that. In Mahindra World City Chennai, I think we look at our IC business overall. IC business is a healthy business. In our previous interviews, discussion, I've given a guidance of 400 to 500 crore leasing across all our IC locations, which include Mahindra World City Chennai, Mahindra World City Jaipur, Chennai, which received a very attractive support. Not to support, Sumitomo was already a partner for us, so they signed up to be a partner with us for Origins Chennai Phase 2A and also a MOU for Phase 2B. So across all of our industrial locations, we have a target of 400 to 500 crore and a healthy PAT that comes out of it. So I think we're on track. The first 9 months have been quite good, but some big transactions pipeline are in the pipeline for quarter 4. Some have already happened in January, which have been publicly announced. There are a couple of other transactions in the pipeline. So we will achieve our IC targets aspiration that we have from our IC business, including Wall Street and NTPC.
Amit, you have a bookings guidance of 8 to 10,000 crores by FY28, and even if we take your point that you will achieve 2,500 by the end of this year, that's almost a 4x jump in the next 3 years. How do you plan on achieving that? Whether it is more launches that are in the pipeline, or are you looking at inorganic growth or more JDs? What's in the pipeline?
So this is a very interesting question. I think the first step in this industry to achieve the pre-sale guidance is to ensure that you have the raw material, which is the land bank. And we have covered a lot of ground in the last 18 months that I've been around. This financial year alone, and we just announced like 15 minutes back a new transaction as we talked about in Andheri. If you include that, we would have done GDV of roughly 16,000 crore in this financial year. Last year full year was 4,400, and 4 years back it was less than 1,000. So we have scaled from 1 to 4x in 4 years, and from last year to this year we have scaled up 4 times just in 10 months so far. So we are really creating our land pipeline that allow us to do the launches in line with the aspiration that we have set out. So that's the first part, making sure that you have the GDV sources, GDV land banks locked in, and we'll finish the year very, very strong on that front. And then comes the part from land to launch, which is making sure that you design, approval process are well done. And then comes the launch to OC,
right,
and construction. So we are solving each part of the puzzle very, very creatively, but also very diligently. And the first step is actually very much under control. So hopefully that answers your question.
Yes, that does. Thank you so much, Mr. Sinha, for joining us and giving us a sense of how Q3 panned by, how Q4 looks. And also, congratulations on the latest win when it comes to Andheri West location in Mumbai. Let's now slip into a short break.
Welcome back. You're watching Midcap Radar on CNBC-TV18. We are now being joined by Indrajit Mukherjee, who is the Vice Chairman at Texmaco Rail and Engineering. Mr. Mukherjee, good afternoon. Thank you for joining in. Before we get to numbers and to talk about the road ahead, I'd first like to ask you your views on the budget. The numbers that came in for the railways, the allocation when it comes to infra upgrades, rolling stock. What do you make of this, the allocation that has been made for you as a company?
I think this is what we were expecting. It is something not very unexpected because the total capital outlay has marginally gone up. But if you would see that the loading is also marginally going up, they are going to buy the procurement of wagons. In fact, have been up by 20% as we see as the estimate for the 25-26. The most importantly is that the railways have given an estimates of making positive cash flow for the year. and a major chunk of that cash flow is going to come from the freight cars revenue. This is going to be up by something like about from 180,000 to 188,000 crores. So which means that that can only happen if there are more number of wagons come in and there are more transportation. So obviously, we expect that it's something like what we expected in line with the National Rail Plan.
Okay. Mr. Mukherjee, the other thing what we want to understand from you is, now given the budget, given the order book that you're sitting at a little over 8,000 crore, would you be able to quantify, number one, the order prospect pipeline for Q4 and FY26? And at the end of FY26, can you give us a guidance as to what exactly are the kind of order inflows you anticipate and where could your order book stand at?
You see, if you have to, let's do a little bit of math.
Right.
If our own company is concerned, so we are sitting on something like about 12,000 wagons order right now. And that's actually is we are producing close to 12,000, maybe slightly higher. So if you have to keep a similar kind of numbers, then we should have at least 1.5 times of the order book that we have today. And one very important thing is that if you strictly talk about the freight cars, which are the wagons, the orders are going to be from railways, but there are also orders going to come from the private players. So because the commodities have to move. So answering your question, that I would expect to end up 2026 with a order book on the number of wagons should be more than what we have today, and that's the kind of order that I think we should be able to procure. The market is pretty good. And I'm not even considering the markets which are also available outside India, the export market. I'm only talking of the Indian market, which consists of the purchase by the railways as well as by the private players.
So allow us to push you a little bit more. 12,000 wagons is where you are standing at currently. So FY26, what kind of percentage growth can we see? Domestic market, what will you anticipate? And export market, what can you expect?
Percentage growth of procurement by the percentage growth of national procurement, is that what you mean?
That's right, and depending on your order win ratio, yes. Yeah.
My own hunch, if I can do, it's going to be something like 15-20% higher than last year. I mean, but that's my own guesstimate.
But Mr. Mukherjee,
based on lots of data.
Right. And based on that data, then if you could tell us that 35 to 40% growth rate that you're expecting over the next 2 years, do you stick to that? Because your 9-month growth rate is fairly healthy. So do you expect to be between 35 to 40% conservatively, or would you want to?
We should be able to do that because it's just not the wagons that makes our business. The wagon is about 54% of our order book. So we are in jobs like electrification. We have the foundry. We are rejuvenating our EPC business, which was remaining flat for the couple of years. So that's a big area. And as you have seen, that there is so many tracks are going to be laid, and safety coverage. All these are coming up in the budget for the next year's expectation. And we have one of the few companies we have got the credentials to do all this. So I think it's not going to be only wagon, but it's going to be combinations of so many other arms. So electrification business is doing very well.
Mr. Mukherjee, you've given us a good sense of the business. Now, the other thing that you've done, especially over the last year and a half, has been multiple corporate restructuring. Give us a sense of the potential demerger of the rail EPC business. What will be the order book that gets transferred over there, and what are the kind of targets you're setting for the EPC part of the business?
See, current now the order book is not that high. It's going to be in the range of 8 to 1,000 crores level. We are executing a few very important projects. We are finishing the Western Dedicated Freight Corridor. We have in metros, a couple of metros like Bangalore, Bhopal, etc. But I would expect that our order book will be particularly on the track laying, signaling. We'll have substantial orders coming up.
All right, Mr. Mukherjee, thank you so much for sparing time, joining us today. Wish you good luck for the rest of the year as well. That was the management of Texmaco Rail, sharing light on the road ahead as well. With that, it's a wrap for this edition of Midcap Radar from me, Vivek, and the team that put this show together. Thank you so much for watching. On the other side, a very special edition of Market Masters when we return.